Good afternoon. So on this week's video, there are two questions, one philosophical, one practical. The practical one is, are we using AI to do options trading really well? And I just wanted to show you how it was used this week. And then another thing is actually artificial general intelligence. I just had the intuitive feel that we're still going to be leading AI because it gave us really good analysis, but it wasn't really what was appropriate for us, and you need a human to kind of lead that. Anyway, I'll show you what we learned and what we did.
Welcome to the danger zone. Before we click a single button, we need to find our starting point. Think of this as a line in the sand. If I sell options below this level, I'm basically inviting disaster to dinner. Why? Because if the trade goes the wrong way, I end up with less Bitcoin and fewer dollars. That's a double loss, and we only do win-wins here. Now, a quick reality check. This doesn't always work. If there were a 100% guarantee in crypto, I'd be broadcasting this from a private island shaped like a giant bee. Stay sharp. Let's look at our magic number, 88,151. Last quarter, I got into a bit of trouble by selling options on the way down. Our goal is simple, quarterly income in either Bitcoin or dollars. But if we get impatient and sell below that original point and then the price recovers, poof, we've destroyed both goals. Don't be a hero, respect the recovery. Eyes on the prize, people. March 27th is the end of the quarter. That's our finish line, and that is the only date we care about when we're looking for results. Let's talk Greeks. No, not the yogurt. I'm talking about delta. Technically, it measures how much your option moves relative to the future's price. But for us, it's basically a probability of getting punched meter. It's a way to approximate the chance that your call option will actually be called away. Low delta equals better sleep. Here's a pro tip. When you look at the standard web screen, it's fine. It's the kiddie menu. It doesn't show you all the variables. But when you export that CSV file, that's where the real party starts. That's where the hidden Greeks live. In that export, you get 18 different variables. To be honest, at this level, AI is better than the best trader on Wall Street. Why? Because humans naturally overlook the less significant details. But in options trading, the insignificant stuff is rarely actually insignificant. So we let the machine do the heavy lifting. Ask the AI to optimize the outcome. We're looking for the Goldilocks zone, the best possible income with the lowest possible risk of being called or put. When you're doing this, don't just use the basic chat. Use the deep think or deep research mode in Grok or other high-level AIs. We don't want the fast answer. We want the I've analyzed every timeline like Dr. Strange answer. And remember, context is king. Keep your analysis in a ChatGPT project, a Grok project, or a Gemini gem. You want the AI to remember your previous analysis so it's building on a foundation, not just guessing in the dark. We believe in transparency, so we've kept our first attempt, which was definitely not what we wanted, on our webpage. You can go see the rejected strategy for yourself. It's a great lesson in what not to do. Why did we reject it? Because that strategy sold puts too. If a tail event, those unexpected market meltdowns hit us, we could have wiped out almost half our Bitcoin in a wide downward swing. By sticking to selling calls, we keep the results consistent and our stress levels manageable.